This is the update for Monday, the 16th of November. And there was a total of 9 dividend payments, adding up to 45 cents. A couple of new ones, and then a couple of changes up and down. There's also some of the new UK monthly paying stocks. And I've also set up the recurring deposit of €1 per day. So at the moment I have €2.46, which I think I'm going to put into Almirall, which is currently the worst position in my portfolio, but it's only 22% down, which is not too bad. It's had quite a bit of a drop since I bought in. So put that in there, see how it does. So starting from the top 10, Devon Energy still number 1. So number 1 for quite a while. Loyalty Ventures took it over for a day, but that was really it. Still holding it down at the top. Number 2 is now Loyalty Ventures. Third from the top is Blackstone. Fourth is Innovative Industrial Properties. Fifth is Albemarle. Sixth is Preferred Apartment Communities. Seventh is Novo Nordisk. Eighth is Raiffeisen Bank. Ninth is Rolls-Royce Holdings. And 10th is Croda International. And the worst of the worst, after investing in Almirall now, the bottom is now Deutsche Lufthansa yet again. And that is the ticker symbol LHA for that one. Number 2 from the bottom is now Henkel. I think they're preferred shares. Number 3 is the DLAKY stock of Deutsche Lufthansa. Fourth from the bottom is now Rubis. Fifth is GN Store Nord. Sixth is Deutsche Euroshop. Seventh is Alliance Data Systems. Eighth is Swedish Match. Ninth is Marstons. And 10th is Adler Group. The first dividend payer was Whitestone Real Estate Investment Trust, ticker symbol WSR. That's about $10 per share at the moment, pays a dividend every month, and this was an ordinary payment of 3 cents per share per month. So Whitestone is a real estate investment trust that's engaged in owning and operating commercial properties in culturally diverse markets in the metropolitan areas. The company's acquisition targets are located in densely populated, culturally diverse neighborhoods, primarily in and around Austin, Chicago, Dallas-Fort Worth, Houston, Phoenix, and San Antonio. The company owns approximately 58 commercial properties, which includes 15 properties in Houston, 8 properties in Dallas-Fort Worth, 3 in San Antonio, 4 in Austin, 27 in Scottsdale and Phoenix, Arizona, metropolitan areas, and 1 property in Buffalo Grove, Illinois, which is a suburb of Chicago. The company's properties include Ahwatukee Plaza, probably butchered that, Anthem Marketplace, Bissonnet Beltway, Anthem Marketplace Phase 2, Davenport Village, Desert Canyon, El Dorado Plaza, Fountain Hills, Fountain Square, Fulton Ranch Town Centre, Gilbert Tuscany Village, and Gilbert Tuscany Village Hard Corner. Its current market cap is $472.5 million, has a PE ratio of 87.19, a revenue of $117.9 million, an earnings per share of 11 cents, and a current dividend yield of 4.47%. Its quarterly profit margin is about 9%, and annually is about 5%. Its quarterly debt to assets is about 64%, and annually is about 68%. And its annual cash flow from operating is $42.78 million. From investing is negative $6.44 million, and from financing is negative $26.02 million. The second dividend payer was Navios Maritime Partners, ticker symbol NMM. It's about $28 per share at the moment, pays a dividend every quarter, and this was an ordinary payment of 5 cents per share. So NMM is an international owner and operator of dry cargo and container vessels. The company is engaged in the seaborne transportation services of a range of dry cargo commodities, which include iron ore, coal, grain, and fertilizer, and also containers, chartering its vessels under medium to long-term charters. It focuses on providing seaborne shipping services under long-term time charters, and it controls a fleet of approximately 55 vessels, of which 15 are Cape-size vessels, 24 are Panamaxes, 6 are Ultra Handymaxes, and 10 are container ships. Panamax vessels are vessels capable of carrying a range of dry cargo commodities, which include iron, coal, grain, and fertilizer, and being accommodated in various discharge ports. Capesize vessels are dedicated to the carriage of iron ore and coal. Ultra Handymax vessels are similar to Panamax vessels, although with less carrying capacity, and have self-loading and discharging gear on board to accommodate underdeveloped ports. So it's in the water transportation industry. Its current market cap is $2.11 billion, has a PE ratio of 29.58, has a revenue of $226.7 million, an earnings per share of $1.01, and a current dividend yield of a pretty low 0.67%. Its quarterly profit margin, 65.73%, and over the last year is negative 30%. Its quarterly debt to assets is 46%, and over the last year is about the same. And its annual cash flow from operating is $94 million. From investing is $83.85 million in the red, and from financing is $9.91 million also in the red. Number 3 was NextEra Energy Partners, ticker symbol NEP. It's about $87 per share at the moment, pays a dividend every quarter, and this was an ordinary payment of 58 cents per share. NextEra Energy Partners is a limited partnership formed to acquire, manage, and own contracted clean energy projects. The company, through its limited partnership interest in NextEra Energy Operating Partners, it owns a portfolio of contracted renewable generation assets, which consist of wind and solar projects, as well as natural gas infrastructure assets in Texas and Pennsylvania. The company's project portfolio of clean contracted renewable energy assets includes about 4,000 megawatts of wind and solar energy generating facilities, which are located in the US and in Canada. Its current market cap is $6.51 billion. There's no PE ratio given, so they could be in the negative for losing money. Current revenue is $917 million. Has an earnings per share in the negative 17 cents and a dividend yield of 3.22%. Its quarterly profit margin is about 7%, and annually is about 5.5%. Its quarterly debt to assets is about 83%, and annually is about 81%. And its annual cash flow from operating is $665 million. From investing is negative $681 million, and from financing is negative $4 million. Number 4 was Magellan Midstream Partners, ticker symbol MMP. It's about $49 per share at the moment, pays a dividend every quarter, and this was an ordinary payment of $1.03 per share. So it's in the oil well services and equipment industry of the energy sector, and it's principally engaged in the transportation, storage, and distribution of refined petroleum products and crude oil. The company operates through three segments, which are refined products, crude oil, and marine storage. As of the end of the year of 2016, its asset portfolio, which includes the assets of its joint ventures, consisted of its refined product segment, which itself consists of about 9,700-mile refined products pipeline system with 53 terminals, as well as 26 independent terminals not connected to its pipeline system, and its 1,100-mile ammonia pipeline system. There's also its crude oil segment, which consists of about 2,200 miles of crude oil pipelines and storage facilities, with an aggregate storage capacity of about 26 million barrels, of which 16 million are used for contract storage. And its marine storage segment, which consists of 5 marine terminals located along coastal waterways, with an aggregate storage capacity of about 26 million barrels again. Its current market cap is about $10.24 billion, has a PE ratio of 13.25, has a revenue of $2.43 billion, an earnings per share of $3.62, and a current dividend yield of a nice 8.65%. Its quarterly profit margin is about 37%, and over the last year is about 34%. Its quarterly debt to assets is 76%, and annually is about 72%. And its annual cash flow from operating is $1.11 billion. From investing is about negative $200 million, and for financing is negative $970.2 million. Number 5, General Dynamics, ticker symbol GD. It's about $201 per share, pays a dividend every quarter, and this was an ordinary payment of $1.01 per share. General Dynamics is a global aerospace and defence company, and it offers a portfolio of products and services in business aviation, ship construction and repair, land combat vehicles, weapon systems and munitions, and technology products and services. Its operating segments includes aerospace, marine systems, combat systems, and technologies. The aerospace segment includes business jets and standard bearer in aircraft repair, support, and completion services. Its marine systems segment designs and builds nuclear-powered submarines and offers in-surface combatants and auxiliary ship design and construction for the US Navy. Its combat systems segment manufactures land combat solutions, which include wheeled and tracked combat vehicles like tanks, weapon systems, and munitions. Its technology segment provides a spectrum of services, technologies, and products to market that seek solutions combining electronic hardware with specialized software. Its current market cap is $55.5 billion, has a PE ratio of 18.1, a revenue of $37.92 billion, a nice earnings per share of $11, and a current dividend yield of 2.39%. Its quarterly profit margin is about 9%, and annually is about 8%. Its quarterly debt to assets is about 69.5%, and annually is about the same. And its annual cash flow from operating is $3.8 billion. From investing is negative $974 million, and from financing is $974 million in the red, and from financing is $903 million also in the red. The next dividend payer was Enterprise Products Partners, ticker symbol EPD. It's about $23 per share at the moment, pays a dividend every quarter, and this was an ordinary payment of 45 cents per share. Enterprise Products Partners is a provider of midstream energy services to producers and consumers of natural gas, liquid gas or natural gas liquids, crude oil, petrochemicals, and refined products in North America. The company's segments include the natural gas liquid pipelines and services, crude oil pipelines and services, natural gas pipelines and services, and petrochemical and refined product services. The company's midstream energy operations include natural gas gathering, treating, processing, transportation, and storage. Also, natural gas liquid transportation, fractionation, storage, and import and export terminals, which include liquefied petroleum gas, crude oil gathering, transportation, storage, and terminals, propylene production facilities, butane isomerization and octane enhancement facilities, petrochemical and refined product transportation, storage, export, and marine terminals, and a marine transportation business that operates primarily on the US inland and intracoastal waterway systems. Its current market cap is about $50 billion, has a PE ratio of 11.59, current revenue is $27.2 billion, has an earnings per share of about $2, and a nice dividend yield of 7.86%. Its quarterly profit margin is about 10.5%, and annually is close to 14%. Its quarterly debt to assets is about 63%, and annually is about 62%. And its annual cash flow from operating is $5.89 billion. From investing is negative $3.12 billion, and from financing is negative $2.02 billion. The next dividend payer was Agri Realty Corporation, ticker symbol ADC, and it's about $69 per share at the moment, and it's a real estate investment trust. It pays a dividend every month, and this was an ordinary payment of 19 cents per share, which is up 1 cent from the previous. So it's primarily focused on the ownership, acquisition and development and management of retail properties. The company operates through Agri Limited Partnership, which is the operating partnership, and it owns and operates a portfolio of 868 properties, which are located in 46 states and containing about 16.3 million square feet of gross leasable space. The company's portfolio consists of approximately 1,262 properties located in 46 states and totaling about 26.1 million square feet of gross leasable area. Agri Realty Corporation currently has a market cap of $4.87 billion, has a PE ratio of 41.89, current revenue of $248.5 million, nice earnings per share of $1.67, and a dividend yield of 3.9%. Its quarterly profit margin is about 42%, and annually is about 37%. Its quarterly debt to assets is about 33%, and annually is about 35%. And its annual cash flow from operating is about $143 million. From investing is negative $1.3 billion, and from financing is $1.12 billion. The second last dividend payer was NB Global Monthly Income Fund, ticker symbol NBMI. It's about 90 pence per share at the moment, based in the UK. And it currently pays a dividend every month of 0.39 pence per share. So it's a closed-end investment company, and its objective is to provide its shareholders with regular dividends at levels that are sustainable, whilst preserving the capital value of its investment portfolio. To pursue this objective, the company invests mainly in floating rate senior secured loans issued in the US dollar, sterling and euros by primarily North American and EU corporations, as well as partnerships and other business issuers. Berman Europe Limited is the investment manager, and Berman Investment Advisors is the alternative investment fund manager of the company. So it has a current market cap of £222 million, well, £222.5 million, has a PE ratio of 1.06 thousand, has a revenue of about £16.1 million, a flat earnings per share at 0, and a dividend yield of about 5.18%. Its quarterly profit margin is 184.5%, and annually is about 1.3%. Its quarterly debt to assets is about 5%, and annually is about the same, 5.5%. And its annual cash flow from operating is £260.25 million, and from financing is negative £265.91 million. There's no figure given for their investing fundamental at the moment, or value at the moment. And the final dividend payer was Finsbury Growth. Finsbury Growth Income Trust. Ticker symbol FGT. That's about £9.08 per share, also based in the UK. It pays a dividend twice a year, and this was the first one I've received. It was for 9.1 pence per share. So it's an investment trust company, and its objective is to achieve capital and income growth and to provide shareholders with a total return in excess of that of the Financial Times Stock Exchange, or FTSE, what they call the FTSE All Share Index. The company's investment policy is to invest principally in the securities of companies listed in the UK, incorporated, domiciled, and having business operations within the UK, whilst approximately a maximum of 20% of the portfolio at the time of acquisition. The company invests approximately more than 15% in aggregate of the value of the gross assets of the company in other listed closed-ended investment companies. It invests in a range of sectors which include consumer goods, financials, consumer services, technology, and industrials. Its current market cap is about £2 billion. There's no PE ratio, so it's probably in the negative. Its current revenue is negative £128.5 million. Has a negative earnings per share of 67 pence and a current dividend yield of 1.92%. Its quarterly profit margin is a nice 86%, roughly, and annually is about 110%. Its quarterly debt to assets is about 2%, and annually is about the same, 2%. And its annual cash flow from operating is £25.82 million. From investing is negative £137 million. And from financing is £109.3 million. So that's all for this one. It wasn't a bad start to the week, 9 dividend payments. Well, that's it for today, and I hope that this was useful.